spotlight is on the Reserve Bank governor later today, and in just about a couple of hours from now, we'll get to know whether he cuts rates or not. Goel, the head of Asia Rates and Currency Research at Deutsche Bank, joins us on the phone line to analyze what the impact could be of the RBI action. Samir, hi, good morning. What is your own expectation from the policy today, and do you think that we are headed for some cautious guidance from the governor, given the global scenario?
Yeah, hi, good morning. Yes, I would argue, and I think that's a fairly broad consensus in the market now, that there is space here for RBI to cut rates once more and by 25 basis points. I guess the key question, though, is above and beyond that easing, as you said, whether what sort of a guidance is that accompanies. Now, if you look at what's happening in global financial markets, and I would call it almost a growth tantrum, which markets are throwing at this point, is with very little conviction on growth anywhere in the world. I would argue that the governor will most likely want to flag that as he makes his comments. But I think what would be more critical is whether that necessarily he translates into closing the door for any further easing in India, or whether he remains that open. I think if he does sound like he wants to signal that the terminal policy rates are at 7%, then I think that could be more negative for markets as against just caution about global volatility, which I think the market appreciates already.
Okay, so after battling taper tantrums 2 years ago, we're now battling growth tantrums. Hi, Samir. Good morning. If we do get a rate hike of 25 basis points, as is widely expected, what will be the impact on the yields? Because yields have already fallen from levels of 7.84 in August, which was the time of the previous policy, to about 7.72. Has it completely priced in? And what would be the trajectory of the yields going forward?
Yeah, I think, again, for yields, for bond yields, I think what would be much more critical is the forward-looking guidance. I mean, and I'm assuming that the rate cut does actually come. If of course, the RBI decides not to go for a rate cut, that would be negative for bond markets. But I think I would argue the current level of yields mostly price in the rate cut itself. What, though, remains far more uncertain is whether this is necessarily seen as the terminal rate, or whether if the door is still open for further rate cuts ahead, then I think there will still be scope for yields to grind lower.
How high is the possibility of no rate cut at all today, Samir? Because, you know, there are certain arguments building up to that. I mean, household inflation has risen to 10% plus. The monsoons are 15% below normal this time. And the governor himself has said that his key task is to keep inflation under control. Is there a high possibility of no rate cut at all today?
No, I won't say the possibility is high. Of course, it's not negligible either. But I would argue that the way the central bank would most likely read this is that there is a space here, given that the risks around their inflation target for January next year, which is at 6%, probably look the lowest or most balanced they have in a while. And to that degree, I think a rate cut here would be positive in terms of reinforcing credibility that the RBI is has genuinely been able to break down inflation. So I think there is a space here. I won't say there is, but of course, it remains more an assessment around, I would argue, not necessarily just domestic factors, but more global factors, in whether the governor decides to defer in anticipation of when the Fed liftoff will take place.
Samir, there are two more things in the wish list. One is an SLR cut, and the second one is RBI opening up the FII limits for, in the G-Secs. Your expectations on both?
Yeah, I think the SLR reduction is honestly, and I think the RBI has signaled as such, is a bit more of a structural move, and I think that should be to a large extent divorced from the more cyclical policy actions they do. The FII quota issue is obviously something very eagerly anticipated by the market. I would expect that there will be much better guidance in terms of the framework and the timeline. I don't necessarily think this would imply that they would immediately open up quotas in any significant manner, but almost certainly give better guidance in terms of what is the timeline for that opening up to take place.
Okay. What's your view on the rupee, Sameer? Because that, the currency market has been under strain today. It's opened at 66.40 versus 66, which was the close yesterday. What's your outlook going ahead?
Well, the rupee doesn't look all that bad if you look at what is happening everywhere else in emerging markets.
That's true.
Believe me. Look, I've had this view for a while. The rupee obviously cannot completely buck the trend in emerging markets more broadly and the sell-off in risk assets which is happening globally. I don't think it can completely be disconnected. But having said that, I think what we clearly see is now a much greater association again between the rupee and equity markets. I think what will be critical here is the flows, and in particular out of equity markets, which have been quite severe in the last few months and last few weeks, and that's what has really caused the INR to underperform over the last couple of months. Again, what will be critical is, of course, the policy here in terms of being able to guide whether there is further scope to ease rates to be able to support growth.
Okay, so back to talking about the difficult question of the RBI's future trajectory on easing. Within the two options, one, this is the terminal rate cut if it does happen, and secondly, the door is still open for future rate cuts. Which one would you bet on? Which way would the language swing?
My suspicion is that, like with a lot of things, it happens somewhere in the middle. I don't think he will close the door on further rate cuts, but he would also shy away from committing to any further cuts immediately. I suspect, and if he does deliver a rate cut today, that he would now signal that he would want to wait till and possibly slightly beyond the Fed liftoff and seeing how the EM picture evolves before possibly going for anything below 7%.
Okay. So what is your own expectation of what the inflation trajectory will be? Because it seems certain now that the RBI's Jan 2016 target of 6% could be met comfortably. But, the 2017 target of 5% and 2018 target of 4% looks a little bit ambitious under the current circumstances. What's your own expectation?
Yeah, I think at this stage, what becomes very critical is the trends, obviously, both in what's happening to currencies and therefore the pass back into inflation, and very importantly, commodity markets. So taking a call, and I would imagine that the Reserve Bank has a very similar dilemma as well, taking a call on what would likely be the trajectory of inflation through 2016 and into early part of 2017 to try and achieve the next round of target would be much harder right now till we have a better sense of how the commodity price trend would evolve over the period, and of course what happens to broader currencies in the pass back into inflation. I would imagine for now it still looks ambitious to be able to get to the 5% target, but we might not be terribly far away from there, and to that extent I think for now for RBI it would be more about managing the risks around it.
All right, Sameer, appreciate you taking the time out and joining in with your perspective. So he's